Welcome to the podcast. I'm Eric Salzman, joined by Richie Bennett and Kevin Doherty. How are we, guys?
How you doing? Staying
Doing
cool?
better than the U.S. national team.
Yes.
Yeah. Oh, that's and we will put our resident expert, Mr. Salzman, who called the debacle in Seattle.
Oh,
We'll put him on the spot for another pick because now it's getting real interesting, that quarterfinal. Real.
yeah. Boy, did you see?
So at the end, we have to pick your brain for a
I,
lot.
I don't know who stops France. I cannot see anybody stop. Well, I guess the team that plays today, Spain, that could be, but we'll handle that at the end of the show because we have a lot of action to cover here.
Oh yeah.
So why don't we kick this off, Kevin? You found a very disturbing, I would say, post on X, formerly Twitter, about Microsoft and our friends in artificial intelligence, OpenAI and Anthropic. So
Yeah. Yeah, it was very interesting. It was a talk given by Microsoft's head of AI, and he gave a presentation about how they're using AI. And the bottom line is that they're looking for ways to cut costs. And what he said is like the most frontier AI models, the ones that people get excited about. Oh my God, there's a new release every month, and look what this can do. And these frontier models are the ones that are driving the need for increased numbers of data centers because you have to train and blah, 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 blah. So anyway, so he came out and said, look, you only need the really frontier models for certain tasks and small number of tasks that we have AI doing in general. And so Microsoft, the AI that they're using in Outlook and in Excel, so just the basic stuff doesn't need the newest and best frontier model. You can use kind of the old, call it the generic
like
AI,
open source, right? Like
open
yeah,
source. Think of like the what were the like a generic box of cornflakes. The
right.
white box with the blue that just says cornflakes versus the Kellogg's cornflakes, and it's a lot cheaper. And so he basically said, look, the most of the uses people are using AI for, the existing uh, models work just fine, and we don't need to keep paying up for the newest and best version. So that's quite interesting because it challenges some of the economics of AI as a whole. And we'll just have to see again. It's moving so fast, and there's so many changes in this, and this is quite an interesting one.
Yeah, and Microsoft, I think you pointed out, Mike, I mean, you're talking about Excel and Outlook. Those are like the two most, frequently used business software program apps, whatever, on the planet.
Yeah.
And for those of you who are tuning in the first time, welcome. But a common theme we've had has been, we keep saying it, AI will be around, right? Just like airplanes will be around, telephone service will be around. It's hard to tell at this point, if ever, who will be the boss of it, right? So everybody talks about ChatGPT and OpenAI and Anthropic, and all of a sudden, as Kevin points out, Microsoft drops a bomb. And then you look around, and you go, well, shit, they're one of the biggest companies in the world. If they really want to drive AI, I bet they could and put those other guys out if they wanted to. But
now, weren't they? They were the guys who kind of got their, like, they gave them their start for the most part, right? They were one of the early big investors.
Yeah.
And everybody keeps saying about Apple, right? Like Apple is behind the curve. They're not really diving or leaning into AI. And it's like, does that mean they don't think it's worthwhile? I doubt that. I think they're just waiting in the weeds, right?
Yeah, they may see the writing on the wall, right?
Yeah, and if you look at their stock price lately, people aren't punishing them for such behavior. That stock is going higher and higher. So they could come out and say, yeah, all right, we're going to put a lot more money into AI and own it.
Yeah, and meanwhile, I mean, you've got hundreds of billions of dollars supposedly going in to build these data centers and all these big operations. to train AI models.
Right.
And I imagine that these lower end, almost as good models require a lot less computation power.
Yeah.
So if we take what we said last week, which we said there's a big problem, and that's when the plant how do I pronounce Palantir? I think I pronounced it wrong 8 times last week.
No, that was
Is it Palantir?
Palantir.
I think I called it Plantier. The Palantir CEO got up and said that basically they're ripping you off. They're taking your IP. They're taking your corporate secrets. Like, why would you you got to really think twice before you get into bed with these guys. So, I mean, I'm assuming that's a huge part of the valuation of these, the ChatGPT, OpenAI, AI, and Anthropic. And then you add on top of it that the revenue model, I think, Kevin, this was said in that X tweet, or whatever you want to call, I don't know what they call them these days, that basically it was the revenue model for these guys was based on the assumption that everyone will need these frontier models forever, like an endless need for these intelligence tokens. And we've heard Sam Altman talk about it, and it just ain't there.
It's like they're saying everyone needs to drive a Ferrari.
Right.
No, you don't. Toyota or Ford is fine for 95% of the time you want to do anything.
Right.
Fiat just came out with a car they compare to a golf cart that's going to cost $13,995. And it can go like 46 miles before it needs a charge. I believe it's an electric vehicle. But people will buy that. Bezos has gone into the car business as well. He is making a small SUV with no power windows, no frills, roll-up windows, right? 24 grand. So he's testing it. Like, will people buy this? They might, right? They might. It's like, car prices are high, and it's like anything else, right? And we always go back to the moat, right? If you have the moat and nobody can bust your business, you win. But a lot of these things we're learning, even though, AI sounds like, wow, oh my goodness, this is like cutting edge stuff. And when you have guys who break it down like we do, maybe it's not, maybe like we said, you don't need all the bells and whistles. You can just,
and the world is not short of very smart software engineers either. I mean, I'm not going to say because they're very bright people, and I know some of them, but they're not. It's not like there's a very small world that understands all this. These guys can go out on their own, and like you said, there's no moat. There's no moat as long as it's not a corporate secret per se. It's not the formula for Coca-Cola. It could be, there's plenty of people out there who can replicate it. And one interesting thing I noticed, talking about the public relations point of AI, did you guys notice, I think one of the hydration breaks in the World Cup, I think it was yesterday's game, it was like a 1-minute commercial by Claude, Anthropic, talking about basically how we're not getting rid of the human race. We're going to, it was just this beautiful, we're going to do this, so we're going to solve all these problems together, and it's going to make everybody's life better. Ooh, like, here we go. They're already kind of fighting that, but that negative image now is taken over, right? Nobody wants the data centers. Nobody wants,
Right. So that's and the guy from Cerberus, right? Feldman, I think his name is. He's the CEO. He was like, he was, forthright, and they asked him, like, what's up with these, data centers and stuff like that. He goes, we were not very nice. We were not very nice to the public. And now the public is mad. And that's a problem, right? Because not in my yard, right? Not in my backyard, NIMBY. That's what's going on with these data centers. So if you can't have a data center, you're kind of hosed, right? I mean, certain places are like, bring them. We don't care. But there are like many states now that have bills in front of their local, their state government banning data centers. Like, you will not be able to build one here.
I read a piece yesterday. It was a manufacturing company somewhere in the Midwest. I'm sorry, I don't remember but the main point was that their utility bills have gone through the roof, and their profit margins have gone like that because they're a manufacturing concern. And it's because there's a data center there, and so it's like I just I mean, you hate to always be the naysayer, but we've been watching this and we're like, this ain't gonna fly. I mean, who's paying for all this?
And the other thing that I noticed, there was an article in the Wall Street Journal, I think today, and I saw it somewhere else. The tentacles of AI are large, right? We always talk about like the spaghetti thing or whatever.
Yeah.
But now, which is the ultimate in ultimate tentacles, the word is in San Francisco, not so much around the city of San Francisco, but in San Francisco proper. Real estate is now going through the roof again, right? Remember when San Francisco was done, right? It was like Silicon Valley, the pandemic.
Humans pooping on the sidewalk.
Yeah, everything's gone. And it's been like that since like they found gold in 1849, right? Like that town has always been boom and bust, boom and bust, boom and bust. So now we're in a boom, right? And they said that people are buying homes in front of, they want to get in there because when the Anthropic and ChatGPT IPOs happen, there'll be more rich people and then they'll buy the houses. So, and I'm like reading this and I'm like, wait, what? So like, let's buy an overpriced house before it becomes twice overpriced, because these guys will have bundles of money and just run it. And it's the quintessential story forever and ever and ever. And like, it just repeats and repeats and repeats. I'll give you a funny story. In 2002, when we're like, it is Shitsville in the NASDAQ, right? It's dropped. I mean, 9/11's already happened, but like the NASDAQ is down like 50% from the top, 50, right? Just bear market crush. There was a really smart guy that I worked with, and he was on the derivative desk, smart guy. And he looks at me and he goes, yeah, these stocks, geez. He goes, thank God I got my house. And I looked at him, I'm joking. I was like, bro, like, and he lived, across the river in Jersey from Manhattan. I'm like, you don't think this is going to affect your house? Like, what are you, high now? What are you talking about? Like, dude, like people's wealth was tied into this NASDAQ thing. You think they're going to bid up your home now because it's different? It's a different asset class? And sure enough, I mean, it actually wasn't horrible for the real estate market somehow, some way. So bad. It was bad. But it didn't really happen until like the 07, 08 crisis. But it was on its way. But he looked at me and said that. And I was like, dude, what are you talking about? Like, oh, no, it's good. Like, that's stocks are stocks. Real estate's real estate. It's different.
Okay. Never shall they meet.
Yeah. So it's just so you can see the tentacles out there with the AI, and it's
it used to be like, something like this would happen every generation, maybe something like this would happen. Now it's every decade, every 5 years, and people don't seem to see it. Like, just the fact that the war's over. Oh, wait, no, it's not. I mean, I kept hearing people talking about the peace trade all last week, and I'm like, what? Like, nothing's been resolved. The potential for this to start up again is like it could happen at the snap, and of course it happened. And it just makes me think, like, do the people who say these things believe them, and they just don't really look at things the way that they should? Or is it just that, hey, it's a trade, right? You buy them in the peace trade, make sure you sell them before the peace trade goes away, and then just re-up and do it over and over again, which you kind of could especially with Trump. Like, you literally set your watch by when this is going to go bad, and then he's going to say something, and it'll get back to being good again, and then it'll be bad again. But it's like we have these situations, and people just forget. And I don't know how you forget when it just happened 5 years ago or 3 years ago. That's what I don't understand.
It's there's so many moving parts right now, and as you say, like with the war, just from one day to the next, who knows what's going to happen? And with the tech, with the AI, I've kind of find myself in an unusual situation where I'm pretty optimistic on a 5-year view, and the technological development that's happening outside of AI, but what AI is facilitating in other areas, and small modular reactors, this new nuclear renaissance that we're on the brink of, and robotics, and all of this stuff can really, you can see how this is going to be really, really amazing and positive and drive things forward. But it's the near term, the next months or 6 months that I feel like I have so little conviction on. And it's kind of the reverse. Throughout my career, I usually had short-term conviction and medium-term uncertainty. And it's kind of the opposite now. It's a bit unsettling.
Yeah. Mm. And we had talked about this before we came on the air. This SK Hynix, they're the big tech company in Korea. The other one, Samsung being the big one. These guys are just as big or close to it, maybe now bigger today. So like they listed, they're no dummies, right? They had good advisors. They listed their stock. It used to only trade in the Korean stock market. And they listed their stock today in New York. I don't think it's traded yet, but it was 7 times oversubscribed for their IPO, which is not really an IPO, right? It's an existing company that's just listing here. And for whatever they were offering out share-wise, it was 7 times oversubscribed last night. And there were so many orders, again, like the SpaceX, that they couldn't process all the trades this morning because there were so many that they haven't yet, and it's almost noon, but they haven't yet been able to free the thing to trade. And I'm guessing the first move will be, it's going to be up if there was 7 times oversubscribed and people
Oh, Rich, one thing. So these are memory chip maker, right? They're the
yes,
Micron, and so again, based on this seemingly endless need for compute power, that's what's driving that trade.
yes. And again, like we talk about history and what have you, like when these big IPOs happen over history, right? The guys that run these companies are pretty smart, and gals, and they get a push from their bankers who are also smart guys and gals. And they're like, it's time to sell. Like, you want to sell in this market. And that usually ends up being bad for Joe Shit the Ragman retail, right? Like, it's just like, you just see it time and again, like, all right, it's getting frothy. It's getting frothy. And the banker says to the company, if you don't do this now,
Right.
shit might hit the fan and you'll never be able to do it.
Don't walk, run.
Right. And that gets them over the edge, and they say, done, do it.
So Richie, Kevin, would this be kind of almost like insider selling? I mean, is it kind of treated the same way where if you had an existing stock, oh my God, all the insiders are selling. I mean, it's kind of the same thing, right?
You're talking about the SK Hynix?
Yeah, just in general, the rush to issue.
Well, as you guys were talking, I was just checking to see, and so it is basically like an ADR facility, according to ChatGPT, and the shares are fully fungible.
Mhm.
So in theory, they should not, like, the price should not be different between the U.S. and Korea, or the valuation. Obviously, the price is going to be different because of different currencies. But also, I know that Korea has some capital controls that were an issue for a long time. There was, for Bitcoin, what was called the kimchi premium. kimchi being, the Korean spice food. And Bitcoin would trade at a premium in Korea versus global markets because it was not easy to do the currency transaction because normally if there's a premium or a discount you can run that arbitrage all day long
Right.
and get basically free money. But that kimchi premium lasted for years with Bitcoin because it was really hard to get the bank account set up to be able to do it. So I don't know if that is the case for SK Hynix as well. We'll see in the coming days. But it's smart for the company if they're I don't
Absolutely.
know, are these primary shares or are these like what's the facility of these? Because if
I don't
they're
know.
raising money, great, smart. Let me. You guys,
Apparently, like as a side note, nobody knows the truth, right? There's no scientific or exact science to this, but so like the meme guys here in America, right? The kids that got all famous during the pandemic, like living in mom and dad's basement, buying up all the meme stocks that they wanted, driving guys who were short stock out of business, right? Powerful, powerful. I'm talking about like GameStop and Chewy and all these places. Apparently in Asia, this is like 50 times crazier than any of these kids in the US. Like every kid that I've read a couple of articles about how almost every kid in Asia, kid being like 18 to like 30, they're like, no, dude, you got to get into the stock market, bro. Like we got to get into this Asian stock market, and you definitely have to get into Samsung and SK Hynix. Like you have to.
Right.
So the leverage apparently in these accounts is ridiculous. It's like way more than anything we see here. So again, it's like you see that little fuse right there? Maybe it's getting lit and something's gonna kaboom. Because as we always talk about too, the stock market is an escalator on the way up and it's an elevator on the way down.
The
So
Express.
yeah. So when things go bad, they go bad in a hurry. Right. It's just like, oh, bye. So all these kids who are on margin, which they are, anytime there's like a big move in the markets, they're going to get margin calls if they're long and the market goes down. And then that sends, if they don't have the money, they're forced sold by their broker. And that creates like the pool of sell. Everybody's selling because they don't have, it was all leveraged and everybody's done.
So I think what you said a few weeks ago, Richie, about the Kospi, that's the main Korean index, equity index. We should watch the Kospi every night. And the day that thing goes down 12%, like it has, that could be the beginning.
Yeah, and there's like insane stats on the Kospi. Like, so we think our stock market is like somewhat volatile. Like it's insane. Like that thing has moved like 5% one way or the other, like so many times, it's ridiculous. So that just tells me it's the casino, right?
so it was a primary issue, and they raised $26.5 billion that goes straight to the company's balance sheet. So good for them.
That's a lot.
That's a nice chunk of change. With the animal spirits, I actually got invited. I wonder what this says about me, frankly. To Robinhood is having some sort of jamboree in Houston at the end of September, and I got an invitation the other day, and they said, "Come on down, we'll give you a free hotel room." So I'd love to go there just to see what kind of these degenerates are like and how crazy it is. But
You
We might
should come
give
out
you
with a Formula One suit, like Vlad.
yeah. And we might give you a camera to like an underground camera.
Yeah,
In
unfortunately,
a bow tie, right? That was in a song, right? Paul Simon said that bow tie is actually a camera. I think that was in a
we
Paul Simon
we
Oh,
song.
might have
yes,
to
yes.
rent a toupee for me as well because I don't think I've got the hairline for the type of degenerate stock trader they're looking for.
We can do that. We can do that.
So speaking of leverage, let's pivot a little bit. So forever, since the three of us have been in the business for probably almost the same amount of time. You guys are a little younger than me, but the infamous yen carry trade.
Yes. Why don't you
That
explain that to our viewers, Keith?
okay.
Because
Well,
that's a big thing.
before 2008, I used to say like the yen carry. There's like the old wives' tale of don't cross your eyes, your face will freeze like that, or or don't pick your nose, you'll turn green. And the other one was someday the yen carry trade will end, right? And it never ended until it really ended in 2008. So here's what it is. So in Japan right now, let's just hold everything constant. So right now in Japan, you can go, let's say you're a hedge fund, you could borrow yen from a Japanese bank and you will pay let's say a money market rate. You'll pay 1% on that, right? You then take that and you put it into US dollars, let's say. So now you take that yen, you sell the yen, you buy dollars, and you put that into a US money market type fund. And what you get there is I'm borrowing at 1% and I'm investing at 3.5% or something like that, right? So that I capture that differential. Now, of course, there's no free lunch, right? So if I do that, let's say for a year, what should happen, and this is why, and these are very liquid, they trade called the foreign currency forwards. So what is dollar yen? Let's say dollar yen right now is 162, meaning $1 buys 162 yen. What is that rate going to be 1 year forward? And the way you figure that out is you basically work for if I'm making that 3%, if I'm making that net, call it 3%, and I want to unwind the trade a year from now, I then have to sell dollars and buy yen to give the bank that I borrowed the money from the yen back. Well, the FX forward will make it's like very liquid. It's right on the nose every time because this is what guys trade all the time. The yen should strengthen against the dollar exactly the amount of arbitrage. There's no arbitrage, no free lunch. So whatever I would make on that, I would lose when I go to unwind and to sell my dollars and buy yen back, right? So that trade has been going on forever. So think about it. If I either believe that, the yen isn't going to strengthen that much against the dollar because of X, Y, and Z, it's a good trade. I can't pocket it today, lock it in the day I do the trade, but I could certainly do it. I think I'm going to make more money borrowing in yen, investing in Australian dollars, or investing in any kind of relatively liquid currency that I can get a higher return on when I do that trade. That's the pure FX trade. So that's what the yen carry trade is. But now imagine that I could borrow yen at 1% and I'm going to invest it in, I don't know, big tech, AI, something like that, right? I'm funding that trade with a low cost with a low cost borrowing. I'm putting it into dollars or I'm putting it into wherever I want to put it into. I'm a hedge fund. I want to buy tech stocks. I want to do whatever I want to do with it. That trade works out as long as the thing that I'm buying and the currency that I'm in doesn't crash, right? Or let's say that, stop me anytime, guys, if I'm getting too into the weeds or not. But we would think, so right now, there's a lot of hedge funds and a lot of leverage money that is borrowed in yen and is investing in all kinds of fun things over here. Not just the straight FX trade, but they're buying stocks. Maybe, Kevin, they buy Bitcoin with the yen carry trade?
They could.
Yeah, I'm just any kind of risk asset, let's say. Well, the one problem is that, and I read something from Goldman Sachs today, actually, I was really scratching my head. because one of the risks is that I'm borrowing, and I'm borrowing basically overnight money. Well, in Japan right now, while their CPI, meaning that the prices that the consumers are paying are still somewhat reasonable, producer PPI, producer price index, has gone through the roof. I think it's up about 7% year over year, and it's going up more every month. And one of the reasons is that the yen has just been getting destroyed. The yen is now at 162 yen. $1 buys 162 yen. 160 used to be the freaking red line where you'd expect the Ministry of Finance, the MOF, to come in and start doing special operations, buying yen, selling dollars, whatever, to get to get the yen back under that 160. They're not doing it this time because I think I read a figure they've spent about $200 billion in the last few years just doing these interventions into the FX market to try to bring the yen back into some sort of a stronger yen, at least not as weak as 160. And they failed every time, as most currency interventions do, because it's a drop in the ocean. A billion or 5 billion that you're doing today is up against trillions. So it's supposed to shock the market, scare guys, and get the market back on side. It hasn't worked. Well, the other way that it could work is that the Bank of Japan, the BOJ, starts raising rates. So you're looking at what's going on in Japan now, and they're raising slowly. They're up to 1%. That used to be minus 10 basis points. Now it's 1%. But potentially they are in the same predicament that the Fed was in 2022 and 23, where, oh, shoot, we're behind the curve. And now we have to start raising rates rapidly. And that's what happened in 22, 23. And we know how it worked there. Well, if the BOJ meets, at the end of this month and decides, you know what, we got to go, or even let's say in the middle, they say, we got to intervene now, and they start raising rates. Well, all of a sudden, the guys that were borrowing at 1%, all of a sudden now they're borrowing at 1.5%, right? The trade stopped working. And if that unravels, then everything that we're talking about here with AI and all the different, whether it's the chips or whether it's the large language model, the frontier model producers, or whatever, the big, the Mag 7, that's going to have a big problem. And what's interesting is that Goldman Sachs basically recommended the carry trade, and they recommended the carry trade today, and they're smarter than me, so I guess I'm wrong. But they're basically talking about, there's a quote, "It is the stabilization of this range of G10 rates," that's the top 10 most developed economies on the planet, "with reduced realized vol from rate differentials and relatively limited policy action expected ahead." Maybe they have a trade they need to get. Maybe they need to get out of the yen carry trade, so they're pushing it, which has happened. But I read that, and I'm like, how can you say that? The yen's at 162. At a certain point, the PPI can't be 7%, and the CPI can't be what. Either one has to come down and one has to go up. And I have a feeling it's going to be the latter. It's going to go up. There's only so many times that the Japanese corporations cannot pass through this inflation. So I was shocked by that. But if Goldman's right, then everything I'm saying is don't worry about it. But if you think that the BOJ might be behind the curve and have to start raising rates rapidly, then that's a problem.
Yeah.
Just quickly, did they give an estimate of how big they think the carry trade is now? I know it's
I didn't
controversial.
See it in this one.
Yeah,
what's the latest
estimates
you've
are
seen?
all over the place.
Yeah.
So it could be $1 trillion, could be 10 trillion.
We'll find out. We'll find out if it goes up.
For those who are new and don't understand the yen carry trade, Eric pointed it out, but basically what's going on for a long time is hedge funds and sophisticated investors have figured out how to borrow money using Japan as a country via their currency and their interest rates to borrow at a very low number. So think about back in the day when for a little bit there, you could get a mortgage for 2.75% or 3% in this country. So when you can borrow for 1%, 0.5%, minus 10 basis points percent, and you can borrow that for like a lot of money, like a lot of money. And now it's basically free money that you have in your pocket, where you have to pay very little interest to pay it back. You can buy almost anything on the planet, right? And if it's better, if it makes any money, you're making money because you basically borrowed for nothing. It's like hitting your rich aunt up for 20 million bucks and saying, Auntie, I can turn this into a lot. And even if I don't turn this into a lot, that's a good rate you're giving me, which is 0. Like I pay you back whenever. I got to pay you back, but I'll figure it out. And I can do a lot of things that might make me a lot of money. And some will lose, but some will make. So it's a common theme that we've been talking about on the show for a long time. It's the liquidity situation, right? It's liquidity. Like, is there liquidity in the system to do many, many things? And if that yen carry trade becomes tougher or not happening anymore, that could lead to a lot of losses in a lot of various markets.
Yeah.
Anything speculative, anything. I mean, if that spigot is cut off, there's problems in the world. And it sounds like that's where it's going.
And quickly, that's the other thing, is like, if it happens like that, if it's not telegraphed that, hey, we're going to go, we're going to raise rates this month, we're going to raise rates 3 times this year or something like that. And it's telegraphed and it's calm. And if you think about it, if I'm the Bank of Japan or I'm the Ministry of Finance, well, I know a hell of a lot of people that are short yen. It's called the yen carry trade. It's like all the people that Richie just described that are out there borrowing the free money to put. Well, if I start jacking rates, guess what? All those guys got to buy the yen back, right? And yen could go from 160 to 135 in a week if it happens.
And I always thought it was funny that this is for another show, some later date. Why it was always I know there were pockets of other countries where it could still happen, but it was always the yen. It was always Japan. And maybe they had like one of the most liquid financial markets. But like it was always Japan. And I understand it had to do with lower rates, but a lot of places had lower rates. Mm-hmm. But they always did the yen. We'll see.
And just to finish off the thought, because we're talking about yen, is that the Japanese 10-year, and we've talked about this before as well, the Japanese 10-year Japanese government bond, we call them JGBs, got to 290 this week, which I know that sounds low compared to our 455, whatever it is now, our 10-year. But that is a jump from practically, I think the Bank of Japan kept that 10-year, capped it at 0.5% for a long time. That was their quantitative easing, where they, basically, where at one point I believe the Bank of Japan owned like 75% or something of Japanese government debt. So think about going from, and most of the time with that 0.5 cap, it didn't even get near it. It was always quarter of a basis. It was 25 basis points or something like that. Well, now it's 290. And one issue that we have to be cognizant of is that there are many Japanese that call them the whales, and it's the big insurance companies, it's the big pension funds. They forever have been, we can't get enough yield on our JGBs to meet our obligations going forward. So we're going to go buy things like the US 10-year, and we're going to currency swap, we'll lock the currency in so we don't have any currency risk, and that's what we're going to do. And that trade's worked forever. Well, now it doesn't. Like right now, that trade isn't working. And it's not work. And I believe I read that they've said the Japanese insurance companies and pension funds, the whales, I think last quarter sold about 30 billion of treasuries, agencies, and actually they back in the day they would buy our municipal debt too. They were buying muni bonds. And they didn't care if taxes. I don't care. Like it's a better yield than what I'm getting over here. So they were buying munis and stuff. I mean, it's one thing to say, well, they're not going to show up at the treasury auctions as much. It's another to say they're going to start selling, and that could take our 10-year up. So there's all this stuff that's going on in the global markets that, that not a lot of people are talking about right now because we're so infatuated with AI and all this other stuff. But there's a lot of stuff happening, and it's pretty risky out there right now.
And it's all kind of connected. Yeah.
It's always connected, and it's never different this time.
So, speaking of connected, we had 3 different picks last week on the soccer. Kevin picked the United States versus Belgium. I picked a tie. And Eric said Belgium was too good for the United States. Well, Eric won.
But the country lost.
The country lost.
So we're not happy.
No. And we can go on about this, but I'm guessing it's not. It seemed like a renaissance in soccer in the United States. Like, here we are, we're ready. We're not. That's for another time too. So I think what we have to do is our real expert in the soccer is Eric Salzman. So
this week,
do you have any thoughts on the quarterfinals, which are about to happen this today and throughout the weekend, and then obviously in a week and a half there's the final game?
I would say, guys, this has been one of the most entertaining World Cups ever that I've seen. I mean, I remember 1982. That was a good one. That was what Italy won. And I remember Paolo Rossi had just gotten sprung from, I think he had done a big gambling issue. And he came back and I think he got the golden boot. That's for the guy who scores the most goals. But this has been really exciting. And yeah, I don't think we're not ready for prime time. I think we know that. And unless you can produce a striker, like a generational, a semi-generational striker, it's just not gonna happen. I think we're permanently a top 15th to 11th type team, which is plenty good for most of the world. I just don't know how we're going to develop ourselves into, you watch these. I was watching France yesterday. I cannot see how anybody stops France. And that was a good Moroccan team they were playing. And a lot of those guys play together in the French, their Premier League. And they wiped the floor with them. I mean, that game could have been 5-0. It was wild. So this game today, Belgium, Spain, everyone's saying that the Belgian team, like when they beat Senegal, right? When they beat Senegal, they were asleep for 85 minutes, and then they did what they did because they got one of those guys, Lukaku, came in and won and tied it up, and they ended up winning. I don't think they've played particularly well in this World Cup. I mean, De Bruyne didn't even play against the U.S. That was the other thing. Like, De Bruyne was on the bench the whole time. And granted, he's 35 years old. He's not the same guy he was, 5 years ago, 4 years ago. But he's still one of the top players, I'd say, elite players in the world. He didn't even play, and Lukaku only came on at the end, the last 5 or 10 minutes. So everybody says this Belgian team is just past their prime. Like pretty much, they're a quality team, but they're old guys and they can't hang. And then Spain, I think at the beginning, Spain was picked. Were they the favorite guys? I think when
they were the co-favorite. Spain and France
France
were the co-favorites. Yeah.
All right. So based on that, I'm going to go with the draw. I'm going to go with 90 minutes. There will be a draw between Belgium and Spain today.
This is great. And
what do I win when I'm right?
I think it's over 3-1 on
really?
the today. Yeah, because I think Spain is like a favorite for sure. I think the numbers are like minus 160, which means if you bet Spain, you got to bet 160 to win 100 for them to win in the 90 minutes. And I think Belgium is 5-1 to win in the 90 minutes, meaning plus 500. But I think the draw is somewhere in between, around 3-1. So
As I run to my DraftKings.
there you go.
Well, it's set up to potentially be some interesting for non-just soccer, football reasons, semifinals, because we know France is in, and they'll play either Spain or Belgium, and those are they border both of those countries, and or Belgium has a significant French minority, and so there's some nationalism that national rivalry that will come with that, and potentially the other side of the bracket could see a semifinal of England versus Argentina, which, as those who know a little history or who are our age will remember, a little thing called the Falkland Islands War in 1982, I think it was. So those two countries don't particularly like each other. So those could be a very, very spicy couple of semifinals.
Well, and remember, this is way before VAR video, where the famous, because Argentina got their revenge. And I bet you the people of Argentina cared more about beating England on the soccer field than they did about the war that happened in 80. And that was the famous hand of God, where the great Maradona from Argentina somehow went up for a head ball. He wasn't getting it, so he punched it, and it was a goal. And there was no review. And go to your YouTube, watch it, how they missed this. But that's how Argentina beat England. And I don't know if they've played in the World Cup again. They may have. I'm not sure, but I know. Like, that's going to be. Argentina has been so exciting. So I think it's going to be Argentina-France when it comes down to. But this Norway-England game is going to be. Will the English again underperform as they seem to do every 4 years? But that should be a super game. I mean, again, there's I think 3/4 of the stars of the Premier League are in that game. So that should be really interesting. So I would take Norway beating it. Holland's going to just one-handedly beat England, and I'd take Argentina over Switzerland.
Jeez, you dropped us
3 picks.
Yeah. Write them down. Run to the windows, everybody. Run to the windows.
All right.
Run.
Well, guys, enjoy the games today. We only got 3 more hours. Maybe an adult beverage for Kevin, since Kevin's already off.
Yeah.
It's 6 o'clock over there in Berlin. And we'll see you next week.
All right. Excellent. See you next week.